The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with me, your humble, lovable, squeezably soft host. Once more into the breach do we go, dear friends. As always, we like to meet about this time to discuss matters of the market.
The following takes place between 2 p.m. and 3 p.m.
It does, and we're up 31 points on the S&P cash, 2.6 billion shares. The volume is good at this time. Not maybe as big as the collapse on Friday, but still very good. As we look at the broad markets, everything's up. Everything's looking beautiful. It is rainbows and unicorns all over the market. And, you know, once back above 2050, we're back into this trading range that I called the doldrums. We blew through it, and guess what? We're right back in it. I think either on Friday or Monday, because I got such a short memory, the second shortest thing I've got, I thought that somewhere between that 2045 and 2070 on the S&P cash is where the first bounce would take us. I think we're fairly close to seeing some significant resistance. I thought the top was about 2070. We are about there. Had a big trade in the newsletter. We bought some out-of-the-money calls on Monday for the daily newsletter. We've had some good positions for a while in the Tech Insider. Got to add an additional one in the carnage of the last few days. So we continue to put things in our shopping cart when everybody tells us we are on the proverbial hot place in a handbasket. But what can we say? Well, we're going to start getting a real good sense of whether or not this was a total shakeout of the market, and we're headed higher in the next few days. We'll talk about the organic reasons why things can move around on us in the next few days, and what's happening on Wall Street with the big men of the street, and something that's they're going to be doing over the next few days. Of course, today is the first and start of the fund buying if you put money in 401ks, but it's more a bigger experience than that. I'll be sitting in for the 4 o'clock hour for Tom O'Brien, so I'll discuss that probably a little bit more in that because I don't think there's a lot of discussion about it. I've probably done it on my show a few times, so maybe we'll introduce some people that don't really have the farther or complete inside baseball description of exactly what fund managers are and what the people that actually are money managers do, the two separate businesses that combine at this time to make the beginning of the month rather bullish almost every month. But you know, we're sitting here at highs of the days, or just off of it by a couple of tenths. And it's very hard to see. In fact, I think I asked on Monday during Larry Presevento's show, would it be days or would it be a week before this was all forgotten? I have some theories on that, which we will discuss probably in the show and on the 4 o'clock hour too. But we shall soldier on. In the meantime, we always have to get this party started. And to do that, we have to play the song. And we all know what that song is.
That it's all just a little bit of history repeating.
It is going to be history repeating on this day in 1956. President Dwight D. Eisenhower, spurred on by memories of how easy it was for the Allied troops to move along Germany's Autobahns in 1945 and direct to the big city. thought how difficult it was for an army to go across the United States in 1919 when he was just getting out of West Point. Signs the Federal Aid Highway Act, otherwise known as the Interstate Highway System. And yes, being on the Autobahn, very nice. Now, everybody says the Autobahn has no speed limits. That is incorrect. There are parts of the Autobahn that have no speed limits. But guess what? People over there do not have heaps and 20-year-old Astro vans with the 2 or maybe even 3 of the tires out there with the donut spares on them. They do not let heaps on the road, and you've got to have very good insurance to drive in Germany. But I took delivery of a M3 and went to the Nuremberg raced it on their track, and stuck it on a ship and brought it back. Wonderful thing to have a brand new BMW M3 and race the absolute living tar off of it on a track that at that part I ran, I think, was somewhere around 10 miles. I think the entire track was 17 or 18 miles at the time, but even the short track on it. But to be in there with a somebody that really knew the track and teach you how to actually drive was wonderful. But the interstate highway system, I imagine the railroads would be much bigger if we'd never done that. Of course, that led to the mass use of the 18-wheeler. And what else can you say about that? That's about all I have for history today. We'll talk more about history in the 4 o'clock hour, as we said. But the most interesting thing to me in the news today was a little blurb from FINRA. The reason why is that we see many broker-dealers and investment banks pull shady stuff, throwing a little bit of salt in the wound of a huge move down. FINRA basically said, well, we're going to fine Deutsche Bank a huge sum of money. And a lot of this stuff is kind of hard, not very sexy, very hard to put your hand around. But there's a thing called blue sheets. And that is when they're trying to figure out who's manipulating the market, they need to get these requests back fairly quickly for who did what. Did anybody buy a bunch of huge options right before everything moved? And it's been one of the schemes for these investment banks to not deliver the data from this blue sheet data, or just forget that they actually had a customer that just happened, 5 minutes before a huge announcement came out, buy huge amounts of calls or maybe huge amounts of puts. But it looks like they have been either horribly mismanaged or more likely, I think, scheming and helping traders do the nasty. And they got caught with their hands in the cookie jar, much less getting thumped by the market in the last week. They are not the only ones, though. This is a common occurrence, but just know that it happens often. But even some of the bigger banks these days are getting whacked by FINRA. We'll be back after this short commercial timeout.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And we are very happy to take a look at a few stocks. Someone wanted me to look at Tesla. Did want to bring up a few things, and I'm showing you the results of what people were shorting yesterday, at least in the QQQs. Very interesting to see what people are shorting and how those stocks react. Now, if you're new to the show, over the last year, I've spent a huge effort in collecting daily short data. Almost everything you look at is at least 15 days in the rearview mirror or longer. They do it bi-monthly, but it still takes a week to 10 days to come out, and sometimes another couple of days. And it's not uncommon to see, everything, like I said, in the rearview mirror, 2 weeks, 16 days. It's not uncommon. So you get a kind of a sense of what people are short, but not. Now, if you do enough work, if you get enough, if you build your own database and you can go to several different websites, you can plug all the data together to actually see what people are shorting each day. You don't get to see what they went home short with, but you get to see as a number of shares how many of those were instituted as short positions. The reason I love this is, of course, when the markets head up, I like to make money, and I like to make big money, and I like to make it fast in the daily newsletter. It is less a fundamental and technical reason other than the fact that if you're very heavily short a stock, you got to cover it back. And for the most part, you're 10 times more likely to day trade if you actually short a stock. So these people are not going to let a stock go against them very far before they start buying. And, of course, once they start buying, it means that other shorts have to start buying, and you get the proverbial short squeeze. So I like to get involved in stocks and buy calls in the short term based on how many people actually have to buy. Some stocks may go up because they love to have them. I like to know that someone has to have them to get out and not get stuck in a position. So anyway, I just someone was asking me, but I did want to tell everybody just the stocks that everybody is hammering on, and yesterday was a great example. We came off the bottom. Everybody thought, you know what? This is it. We got our bounce. We got 30 points. The world's headed to hell in a handbasket. It's the end of the world. Dogs and cats living together. The dead rising from the grave. All the hysteria that we've heard before. But yesterday, 23% of Micron shares were shorted. It doesn't mean they went home with it, but 23% of the actual shares were instituted as a short position. Also, Seagate, Siri, Tesla, which I want to talk about next because we had a request for it. Tractor Supply at 21%, WFM 21%, Paychex Payx at 20, Priceline at 20, March at 20, Facebook at 20. We're going to look at a handful of these today just so you get the idea of what happens on a market that does turn, that does go higher. And what happens to those guys is that not only do new people want to buy, but of course the shorts on the wrong side of the market have to buy back their shares either or hang on for the ride that may last a lot longer than they wish to. But one of the things that happened on Monday that I was watching intently was Tesla having a real problem holding itself down. Also, after the gap down, the heavy gap down on the 22nd, where Mr. Musk probably had a very ill-timed and rather stupid idea to bail out one of his failing companies with one of his companies that is probably going to fail soon or sooner. But what did we have? It went down a little bit, but really in all the hysteria and yelling and screaming, what did we have on Friday and Monday? Thursday, Friday, not a whole lot. You had a lot of volume on that huge gap day, but volume had been falling kind of for a few days. You get that along with a stock that just can't go down, you're probably going to pop. And I like these stocks just because I know someone has to buy. Even if it does not go down, there's a fairly decent cushion that means that you're not going to lose a lot if you buy options. If you go into the equities, you're probably not going to lose anything. So they're extremely great short-term plays. As somebody in the den said, we talked about the fund buying coming in today also. And a sucker never gets an even break. And that is the 401k money. If they can, of course, they will sell to them at the highest level of the month every single month. Was it Barnum, or was it Bailey that said a sucker never gets a break, or a sucker should never get a break? Can't remember. I do remember that Jesse Livermore said, for a sucker play, you get sucker pay. And P.T. Barnum, okay. Anyway, like this, now there isn't a lot of volume, but even these super doggy stocks that with fleas and ticks get a little bit of love on a bad day. So always interesting to see, and even if you don't have the data, you should be thinking about whether or not these stocks are hated and why. Micron, a lot of people are trying to short this going into earnings tomorrow night. Seagate, I could probably say that's not a bad deal to short them, but probably not at this time. Even it had a problem going down with any kind of volume. As I said, a great deal of these stocks, as we talked on Monday and Tuesday, we're going down on lighter volume. We went through the big lists that in my scan that we showed yesterday. And this is where you get these rips your face off, instant reversals, along with dubious news on why the United States markets should go down when most likely all that cash that goes to money heaven in Europe will find its way here. You could either throw more money at China and maybe get it back, or you could put it in the United States where you know you're going to get it back. And my guess is right now that maybe there'll be money put into third world countries. But guess what? It's going to be through the stock market. And that stock market's not going to be China. It's not going to be the EU markets. It's going to be the United States markets, because we are the best house in a horrible neighborhood. Yes, everybody next door to us has their car up on blocks and wearing underwear that is probably red with white T-shirts. So it is one of those things where we are just a little classier than the rest of the folks, probably not as corrupt. And that money will flow to where it's going to be treated the best. And my theory has been that in the short term, UK probably down a little bit. But do you really want to be in the last countries when they shut the lights off in the EU? I don't think so. I want to put my money where God intended it to be, in the United States stock market. We'll be back.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we'll continue on. Market's just kind of chipping away here. I had a request to talk about what I was playing, and we'll get into that yet today. Question also was, what were the top stocks in the SPYs that were being shorted yesterday? Frontier, who is a company that bought our local internet provider down here that used to be Fios Verizon. MRO, PDCO, AA, CHK, Micron, as we said, SNA, STX, UA, and PBCT. So if you are looking at and watching and playing this at home, you want to see how those stocks reacted. Those were the ones that were probably the highestly short coming in this morning, and the ones that my guess is that people probably started buying fairly quickly this morning as the market turned against them. And that's what happens. You get this kind of ratchet action many times when everybody gets incredibly bearish, and that's pretty much what happens. You just get, if you're on the wrong side of the market, especially short, especially going into fund buying, you can get absolutely hammered. But that's kind of interesting. Also have our monthly or bi-monthly data coming out, and I'll be getting that tonight. We'll talk about that tomorrow. That is the FINRA data that comes out every 2 weeks, but of course 10 days or sometimes 14 days in the rearview mirror. So we'll see what that showed us going into the British exit, which I think is going to be very interesting to see how people were truly positioned going into it. What else do we have? Did that. We talked about Seagate. Had a request to talk about a few more of the Gartley patterns from yesterday. We'll do that in this segment, I think, and then we'll get into some others as we're watching the 2070 level on the S&P cash getting knocked. They're knocking on the door there. They're going, hey, Mr. 2070, we're up here to say howdy, howdy. 2.8 billion shares as we go into this segment. So let's take a look at these. SPPI, let's take a quick look at that and the Gartley patterns. Some of these probably are going to get negated. Some of these actually were patterns that just never crossed the B pattern with any kind of volume. Spectrum Pharmaceuticals, SPPI, as we continue this one. I like this one too. The 2.7 on the way up from the X to the A. On the C to D point, just a 2. So let's call it what? The volume was off 35%. I'll ballpark it there. That's pretty much it. You had kind of a cap down, but no real volume. You went under the B point that had 1 million shares. You did it with 927,000 shares, 800,000 shares. 1.1 million shares yesterday, but that was actually a move back up. So you almost have a test of this B point on this one as this Gartley pattern, bullish Gartley, never really kind of extended. Just you got it on the B point there. If you wanted to play this one, the D target is 585. So you need just a little bit more. A lot of times you don't get them. Sometimes if you don't cross that B point with enough energy, it just pops right back into the trading range as we spoke. Another one out here that looked fairly sweet, and I have to say that I should have probably bought this yesterday, and I did not, but it was one of the best Gartley patterns available. And the reason why is it had great energy off the April 12th low up to the 8 point on April 26th high. 5.8 on my power law vector indicator number. When we got to the C point back here, 3205 on June 3rd, you take that down to the June 27th low, and just a 3 compared to that 5.8. Those are the ones that I love because it's telling me that there's no energy on the way down. You've got a significant retrace. This one went to 88% of the retrace. You had the market kind of going with you. Just about everything you should love in a reversal here. So if you are looking at home or reading Tom's book, this is the kind that I like. This is the very light volume out here. No real conviction to the downside other than the fact that the market was headed down at the same time. Select Medical Holdings. Now, this is one where the energy came in far too heavy on the C to D point. And you really need, of course, to watch how the B point is broken. In this case, you had 900,000, I'll call it 1 million shares on the 10th of June, compared to the 810,000 shares on the B point on May 12th. So that negates that pattern. You need to know that even though it's a Gartley pattern, you don't want the B to be broken on more volume. That connotes a weaker market and also a weaker bounce out here in the market. But when you get the energy coming to the C to the D leg, many more times you're going to have at least a consolidation. You're probably going to have maybe less than half the bounce, even if the Gartley does kind of work and you do get a bounce out of it. But normally just the ones where you want to say, hey, you know what? I'm just going to move on. Realogy Holdings, this was another one. The energy on this one, too, expanded. And so do you get a bounce? Yeah, you're going to get a bounce where the market moves 70 points up in 2 days. But is there a lot of juice out here? No. You hate the really high volume down day of the 24th. So, but 2.2 on the way up in the X to A point to the 2.6 on the way down. And I'm going to say that probably, 3/4 of the Gartleys I looked at had lighter volume of some sort on the C to D leg. And that's what I like. Let's see. We talked about KSU yesterday. Let's see how this one popped. I said just how much this looked beautiful when we were talking about it, and it already started yesterday. Lighter volume, I'm not going to be surprised on this. It's come down fairly extensively. But this is one of the better looking patterns out here. We'll see how the volume comes in by the end of the day. But to me, really, it's going to be how this actually starts working next week. But one of the ones that had the weakest C to D legs or light volume coming back in the market, it only came back at 85% of the X to A. And so, you've got a fairly nice pattern out here. But there were so many of these, I think. I don't know. To me, there was just no way that I would have been shorting yesterday, wouldn't have been shorting Monday. But, so many of these had already started to develop as we did the show yesterday. It just seemed that at least we were going to have a fairly decent follow-through. To do what else do we have? We're going to look at some of the stocks that I looked at. Don't have the time. When we come back, we'll talk about the stock that we bought calls in on Monday and how this is kind of turning out. It's still in progress, but we'll talk about it anyway. Be back in a minute.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, many commodities are trading at relative lows. And now you can take advantage with Everbank's new limited time, 5-year, market-safe currency comeback CD. This indexed and U.S. dollar-denominated CD offers 100% principal protection and is based on the equally rated performance of currencies of Australia, Canada, Chile, Mexico, and South Africa. These 5 countries are especially rich in commodities, and their respective currencies are poised to do well should commodity prices begin to recover. Keep in mind that no APY or periodic rate of interest is paid on the CD. Don't miss out on this innovative new financial opportunity. CDs must be opened and funded by the upcoming July 14th deadline. To apply online and learn more about the CD, including product terms and disclosures, visit everbank.com/TFNN now. This advertisement is sponsored content. Everbank is a member FDIC.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Earlier in the day in the den, John, one of our great traders in the den, said the first question you should ask is how much can you lose in a trade? I'm going to expand on that. And that is how little can you lose compared to how much can you gain. That is the heart of asymmetrical trading. That is, lose a little, make a lot, maybe even lose more. But the rewards are so out scale and are so logarithmic compared to the losses that you make money. Many people lose and are only right maybe 50% of the time. But if you make 5 times when you win, compared to the one time you lose, that's the kind of thing that takes you to the very nice retirement instead of to the digging ditches and going after, hopefully I made some money today mentality. I'm not part of that. I don't dig ditches for a living, and an hourly wage seems rather tough to me. I wait for what I think are the most outrageous times to go throwing money at the market. And generally that is when everybody is scared to death or euphoric. What we did buy, I bought a lot of options out of the money calls on Monday, some of them later in the day. For the newsletter, we've got to have stocks that have some pretty huge liquidity. And the one I actually liked the best was the biotechs. All the individual stocks looked good. The indexes looked a little bit poor. But as I said, almost all the indexes looked rather poor, had lots of volume. When you started digging in the underlying stocks, the ones that looked the best and absolute best for me were the biotechs. You wouldn't see that by just looking at the ETF itself. I think a lot of people were just hammering it with shorts going into Friday and actually into yesterday. But we were started buying at $3, the 250 calls. I bought all the way down to, I think, about $1.50. And now those are probably trading around $7.50 to $8 right now. I told my customers to start selling in this 256 to 259 area. So hopefully we're just kind of doling it out to them over the next hour or so. The market may, and in the IBB might go higher, but as we were talking to Andy Heck yesterday, he was looking for a nice snappy line. And I said, don't be a swine, take the dime. And why this is no dime, and we'll have some huge winnings at the worst, $3 to $7.50. At the best, maybe $1.50 to $7.50, maybe $8 here before the end of the day. But asymmetrical returns are where it's at. And some people said I was a little animated. That's because most of the time there aren't a lot of these asymmetrical risk rewards. But you know what? When there's blood in the streets, I have to buy it. And there is, when everybody's predicting the end of the world, I don't mind losing then because, of course, the end of the world will occur. But how am I going to spend that money? Well, if the end of the world doesn't occur, I can spend a great deal of money that I made. So I love hysteria. Especially I love hysteria when there's nothing underneath it to actually make it real. I still have no idea why the United States markets decided in the S&P to drop 100 points like a brick, other than the fact that there weren't a lot of shorts and the machines kind of took over. Everybody bought into the hysteria, and a week later, will we even be talking about this come Wednesday? But the big winner in the daily newsletter, we were able, as we said, to be able to buy more and better stocks that I wanted to own long term. Some of the stocks in the past, a lot of them have been shorts. We needed a lot of them to come off in the Tech Insider to actually get some fairly decent positions. We've got that. We've got some that we're looking forward to holding now for a while if the market will allow us to. But certainly the pounding come Friday allowed us to start buying these stocks at severely reduced prices. And it kind of reminds me of the store that was around in the when I was first in computers, and it was called Crazy Dave's Computers. And of course, I had nothing to do with it. But we had, in our computer store that I sold stuff in, had a little cartoon that someone found from the newspaper. And in it, it had a guy that was behind a nice counter with electronics in it. And all behind him was, our prices are so low, we must be nuts. How do we sell it so low? Well, we're surely going to go out of business selling everything so low. All those kind of flumistry, as a college professor would call it, flumistry, behind him. But the caption in the cartoon was this guy standing in front of the counter talking to the sales agent going, "Across the street where they make no claims to their mental instability, this item is $5 less." And that's kind of the way I feel right now. We're going to look through some of the stocks now in this last little segment that really look very interesting to me. These were in my daily newsletter, so you would have had a little bit of a clue going into these today looking at them. We'll go through a few of them, but not all of them. Air transport service. Again, we've been talking about these Wyckoff patterns. That is a big day with a big volume and a nice big candle. I would have liked to seen the candle finish higher on this day, which is on March 9th. But you had a 4.3 million share day. It went up. We're back down now to the May 23rd low with 270,000 shares. Had a little more when we came into it with 600,000 shares. Still did not break that significant low. Closed back above it. Even yesterday, it was hard to get anything going, just 357,000 shares. And now a bounce. You got a pretty good idea where supply and demand is in this particular stock. I don't know enough about it, but I'll probably be looking at it more in the near future. Some other stocks that look like maybe they've made a fairly interesting bottom, especially when you start seeing the energy from the last high back down to this last low. Really start tailing off. The May 25th low popped down, lots of volume, 18 million shares. You go up to the June 9th high that had 2.7 million shares. You come back down here with some light volume. You did have a little hammer down with some big volume, 15 million shares. Still did not break that 18 million shares. And then the next 2 days, yesterday, 4.6 million shares. Yesterday, it was a Monday, 4.6. Tuesday, we had 3 million shares going against that 18 million share day. You get a little pop out here, not a lot of volume yet. This one may be one that needs a little bit more of a consolidation, but this is what I'm looking on in my radar. I'll be thinking about next week when we come back Do I want to go long? Well, this is kind of the universe of stocks that I will be looking at. In the meantime, well, we're knocking on heaven's door. Knocking on heaven's door. 2070 on the S&P cash.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And what do we got going on after the bell tonight? Pier 1 imports I have on my list. Tomorrow in the morning, we've got the Darden Restaurants for earnings, Paychex, Sunnis Networks, Schnitzer Steel, and is there anything else? In the Constellation brands, Pier 1, it's just hard to see that any of these retail stores look any good. Let's take a quick look at Constellation Brands. Constellation Brands, a nice little move out here. Not a lot of volume today, but we'll see what the morning brings. And got Micron tomorrow night. And I don't think we have anything on Friday. ADAT, not a big stock. So it looks like earnings are going to go into next week. See if there's anything else out there. Well, I mean, Okay, it's Thursday before we have anything else next week. Barracuda Networks on Thursday after the bell. Luby's, Cafeteria. I don't think anything that would move the market. Probably the only moving stock is that Barracuda Networks. Let's take a quick look at that, CUDA. Then we'll get back to our knitting. Could be a nice big ABC up here. I kind of like this nice slow pullback in this one. Let's take a look and see what that would be if we did get it. Take a quick gander here. What is that? 974? Is that what that is to 15? That's to 15. What is that? 1870 on the bigger one there. Could be a bigger one. Let's take a quick look at that. If that is our A, and that is our B, and just a couple of days ago it was our C point. I'll take a look at that. Well, that's not bad. This would, Barracuda Networks would set you up on an ABC up to 2257. There's also, that's right in the middle of this big gap down with heavy volume. I'll be watching that very closely. I do like the energy on the way back down here, especially in the face of overwhelming selling in the markets. Very interesting. Oh, we're almost out of time out here. Let me see if I can get to anything else before the end of the day. I want to take a quick look at Panera. Let me get out of that. You know, you got kind of an interesting move out here in Panera, but I don't see anything else out here. You know, Panera had a very clear sign of a top 220 on December 3rd, retested on no, that's not even right either. Is that correct? I got 1 minute left here. Okay. 220.48 on March 8th, 1.4 million shares. You came in it with such a light volume, you'd have to look at that one as a valid sell signal. Up a little bit, but man, this one still's got that sell signal back up there. I wanted to look at this one just to see how, as one of the stocks in retail that still was kind of doing well, it's come off the top. The energy's about the same. Not a heavy sell signal in this one, but maybe 201.44 is where this headed, March 23rd. Tom O'Brien in the next hour. I'll see you in the 4 o'clock hour to help Tom out with his, what is it, bronchitis? Sounds like bronchitis. In the meantime, sell when you can, not when you have to. We'll see you tomorrow. Same bat channel, same bat time.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.